you to the 20th episode of Coinrule Strategy of the Week series. Remember, we'll also post a recorded version of this live stream on our YouTube channel for your convenience afterwards. If you're watching us later through the YouTube recording, why not consider joining our lively Discord community? Stay updated about upcoming live streams and interact with us in real time. You can find an invite link to this in the video description below. It's an excellent opportunity for you to ask strategy related questions and get immediate responses. It's really a beneficial arrangement for everyone involved. We understand though, due to various commitments, time zone differences and more, not everyone can join us live. In such instances, don't forget to watch our recorded live stream on YouTube at a time that suits you best. Don't forget, our YouTube channel is filled with a variety of streams and Strategy of the Week videos, so if today's strategy doesn't resonate with you, there's numerous others to discover. Right, without further ado, let's jump into it. This week we're focusing on a strategy that really centers around exponential moving averages, or EMAs. The key appeal of this strategy is that it operates independently of TradingView signals, enabling it to leverage Coinrule's AnyCoin scanner. This function will tirelessly browse the market, identifying coins that fulfill our entry criteria and triggering trades accordingly. Plus, the strategy is readily available as a template on Coinrule, simplifying the setup and launch process. For those wanting a detailed understanding, the corresponding script for the strategy can be found on TradingView. If you're interested in conducting a backtest, this is completely feasible, and I'll show you how to do this later. Okay, so let's have a quick look at the broader macro picture first. As the 4th of July recess concludes, we embark on the customary latter half of the fiscal trading year. Notably, this year's Independence Day coincided with the super full buck moon, which marks the first supermoon of the year and the inaugural one in a series of 4 that will be observed until the late September. During the supermoon phase, there's a noticeable alteration in market trends. These boxes showcase the previous 3 super full buck moons. We can see that in 2020, down here where there was a 161% rally in a bear market, in 2021 here we witnessed a 51% sell-off in a bull market, and 2022 here there was a 43% rally in a bear market. The Federal Reserve seems to be on a firm path towards another rate hike this month, although this has largely been anticipated and factored in by the market already. Furthermore, inflation is expected to plateau in the vicinity of 3 to 4% until the end of the year. This is due to the expiration of the positive base effects from the decline in oil prices this quarter and a resurgence in high frequency rent prices. As far as the Fed's 2% objective is concerned, it is not quite there yet. Okay, cool, so let's discuss the indicator we're using. Most of you will rather be familiar with exponential moving averages, but I'm going to run through them quickly again regardless. I'll just load them up here. So here we go, this is our moving average exponential, or exponential moving average I should say. You can see this one in the default form is the 9-period one here. So exponential moving averages are really a type of moving average that gives more weight to recent price changes, making it more responsive to new information compared to the simple moving average. The main distinction between an exponential moving average and a simple moving average is the weighting factor. SMA, or simple moving averages, assign equal weights to all values, whereas EMAs give more importance to more recent data. This is crucial because it makes the EMAs more sensitive to price fluctuations, which can be beneficial in identifying trend reversals more quickly. The period you choose for the EMA depends on what you're trying to achieve. A shorter period like 10 days or 9 days that we have here will be more sensitive to price changes. A longer period like 50 or 200 days will be smoother and less reactive to individual price changes. Traders really use EMAs in several ways. Trend identification is the main one. If the EMA is moving upwards, it suggests an uptrend, and if it's moving downwards, it suggests a downtrend. Crossovers as well. When a short-term EMA crosses a long-term EMA, it may indicate a bullish signal, and vice versa. Support and resistance levels as well. Sometimes the EMA can act as a support and resistance level. For instance, in an uptrend, a coin might bounce off the EMA line. Advantages and disadvantages. EMA's main advantage are the sensitivity to new data, which can provide earlier signals for trading in comparison with simple moving averages. However, this sensitivity can also make it be a disadvantage, as it might lead to false signals or more noise in the market. Okay, excellent. Let's go back to the slides and discuss our entry conditions to the strategy. Okay, so to enter positions, the strategy looks for 4 conditions to be met, all relating to exponential moving averages. We require that all 3 EMAs used in this strategy, which are 8, 12 and 26, must be above the 55 EMA, just like this example here. I know it's quite hard to read, but you get the gist here. I've tried to label them quite well. We also require the closing price of the candle must be above the 55 EMA. You can see this is the 55 EMA, and the closing price was well above this this exponential moving average. So as such, we entered a long position here. Let's have a look at the exit conditions. To exit the positions again, we're going to utilize EMAs. We simply exit the long position if the 13 EMA crosses below the 55 EMA, just like this example here. Okay, cool. Now we've discussed the entry and exit conditions. Let's have a look at backtesting. If you remember earlier, I told you the script is available on our TradingView profile. This is it here. I'll provide a link to this in the description of the video as well. So I'm just going to zoom in a bit so you can see this code a bit better. So you can get a description of the entry and exit conditions again here, but this is just what we've been over, but it's here again for your reference. If you go down here, you get the source code. It's all open source, so you can just copy it and use it as you please. So if you want to backtest it, you can just come here, copy the code, and then come to the chart you want to test it on. So I've already got it loaded here, but you could just paste it in here. Let's do that for your for a demonstration. Once you're happy with this, just click add to the chart, and you see we're provided with some backtesting data. It also shows when we enter positions, when we exit positions. So it's really valuable to be able to kind of visualize entry conditions on the chart here. So you can see here with a total of 37 closed trades, we made a net profit of 49.67%, and we're profitable 43.24% of the time. Which is pretty good performance. Also, another important note is that this strategy presumes using 20% of the available equity in its default form. This means if your starting capital is $1,000, each trade will use $200. So feel free to edit this to 5%, 50%, really just whatever aligns to your own personal preferences, so you can get more suited backtesting data for your own strategy. Another important note here is this is the interval of the backtesting data. You can see it's from the 1st of January 2023 to the 28th of June. So feel free to edit these ranges if you want some more expansive or short backtesting data. Another thing here, we've got the commission value set to 0.1%, which is aligned to the base fee on Binance, but feel free to adjust that if you'd like. Cool. So also another thing, when you change the time frame up here, you'll see that the backtesting data automatically adjusts. So you can see it performs better on the 2 hour. Check the 3 hour again. But I'm gonna execute this on the 1 hour, I think, because we get more executions, and I want this strategy to trade a lot more often than just once every few weeks. Another important thing is if you just change the symbol up here, you'll get some updated backtesting data as well. So you can see it performed much better on Render than it did on ETH. So sorry, Render I should say. Sorry. So if you're happy with this performance, then very simple, just come to Coinrule and come to templates up here. As I mentioned, it's available as a pre-designed template. You can just search up here for EMA cross under strategy. Once you've got it, click select, and you'll see it's automatically preloaded. As I said, I'm going to keep the time frame of 1 hour because I want this to trade a lot more regularly. These are entry conditions, if you'll remember, and this is our exit condition. Now you have to decide what coin you want it to run on. You could have it just run on Render, like I just showed you there, because we obviously know that performed pretty well from our backtesting data here. But I'm going to just have it run on any coin because I want this to trade a lot. I also want this to buy $100 per trade, and then when we sell, I want to sell 100% of the amount bought of that coin. And I want to start immediately, execute 100 times. I'm going to call this EMA cross under strategy. Once you're ready with this, click launch, and you'll get a little preview here, and then click launch, and there we go, your strategy is now live. Thank you very much for listening to the Strategy of the Week video. We're really excited to see what you create. Please reach out if you have any questions as well. We're always on hand to help.